Here we go. This is exciting times. Hey, everybody, Economic Ninja here. We're going to talk about Pacwest Bank. We're going to talk about Heartland Tri-State Bank and a video that I did back in May. Now, I got a text from Dan over at iAllegedly, and he said that he had noticed that a nice lady named Denise had been sharing the fact that I had not only warned everyone about the Pacwest situation that is now imploded and has been taken over by another bank back in May, but in that video, and I'm going to play you a clip of that video, we're actually warned about a bank that was coming out of Kansas City and the size of the bank. And I believe that it was going to be about 3 or 4 weeks after that. But I also did say in numerous videos that I really did believe that the next banking failure was going to come at the end of July, that we were going to go through this period, this eye of the storm. And let me know below if you remember me talking about this analogy that I gave. As we went through the first banking crisis in the spring, where we saw 3 or 4 large banks just literally be decimated, be broken up by the Federal Reserve and the FDIC, which now has equated to a larger scale collapse in dollars lost than all of 2008 combined, okay, to give you some idea of the scope of this banking crisis. And to everybody who hits a thumbs up, I truly, really appreciate you guys and all the comments you put down here, because I'm trying to get the warnings out, right? It's actually very easy to see these signs and how big this is going to be, but I said that this eye of the storm was going to go like almost like it never happened. Nothing ever happened. I also said the same thing about when Jerome Powell paused. I said he's going to pause, but they're going to resume again, right? And I gave the reasons why. But I said the next banking failure was going to come in July. So check us out. Let's start with, I'll wait for a few more people to get on until I play that. But this lady Denise online has been sharing this video that I'm going to share with you in a second. It says here, let's go through the story of Pacwest, okay? And again, this is based off a video I did on May 2nd. Pacwest, and actually I put a link to that video in the top line of the description. Oh, you know what? Why don't I do this too? In honor of Dan encouraging me to do this video, thank you, Dan. He's probably watching right now. If he is, throw up something in the comment section. We've been getting a lot of requests to people have asked us for this foreclosure pro class we put on with our foreclosure expert, which is a friend of Dan's, to put more of those 80% off links below. I don't have it right now as of the filming this live. I'm going to pin it right after this video is done, and we'll make some more of those links live. So it's 80% off, $199. Because like the banking crash, you want to get ready for the real estate crash, which means I want you to be buying properties directly from the banks. Don't wait for them to go to REO. Go straight to the courthouse steps and buy these properties. And so that's what we show you in this course. And I can guarantee you this, for that price of $199, you'll make lots more money than that, just not making easy mistakes that everyone makes when they go to these auctions. All right, so we'll put those down in the comment below. Pacwest Bank, thrashed by deposit crisis, will be taken over. This was just a couple of days ago. Bank of California is set to absorb Pacwest, a larger lender that has seen its deposits flee this year. And to say larger is an understatement. To give you an idea, I think Pacwest was in the top 50 or number 55, 54 size of banks in the country. And Bank of California is around like 143, if my memory serves me right, something like that. So this is a very interesting situation. And the reason why I say interesting is because, first off, these banks are being split up and the assets are being broken apart. And the banks that finally take them over are not taking all of the assets. They do not want those distressed commercial real estate mortgage-backed securities. They are toxic, toxic, toxic. And very soon, the really toxic assets are going to be auto loans and standard home loans, because people are not paying on those either. And they've been bundled up into securities and sold on the stock market, on the exchanges. And they are not going to be well loved either. But right now, it's all about commercial mortgage-backed securities, okay? So think about it. You just had a bank at like the size of the bank at number 140, 150, right, in the country, take over a bank that was in the top 60. That means all those banks, between them, they were asked, do you want it? Do you want this? And they all said no. Finally, a sucker was born, right? And with that being said, that sucker, Bank of California, because I don't think this is going to end up well for them, because they're taking on more assets that are about to go under, right? Different types of debt. And they did not take all of the assets, just like JP Morgan did not take all of the assets the bank they took over. All right. So it says here, the development was a humbling end for the 24-year-old Pacwest Bank, A once fast-growing Los Angeles bank whose clients fed amid turmoil for regional lenders this year. The Pacwest name will be retired, and the combined banks will operate under the Bank of California. In an indication of how weakened Pacwest has become, the combined bank will have just $30.5 billion in deposits, considerably less than the $34 billion that Pacwest had at the start of the year. Totally different sizes. The bank said the combined company will have the strength and market position to support the banking needs of small and medium-sized businesses in California. I do not believe that is going to be the case. I think this is going to end horribly for them. Regional banks have been under pressure since March when Silicon Valley banks collapsed, put a spotlight on the mid-sized lenders. Many such banks say it has become increasingly difficult for them to compete with the country's largest institutions as depositors prize the relative stability that big banks can offer. Let me stop there and remind you that the CEO, was it Brian Moynihan, came out the other day of Bank of America freaking out that the Federal Reserve is putting limitations on them and forcing them to hold back an additional 2% of their deposits for an emergency. I'm not joking. So you've got the small banks whining that the big banks get all this stuff, and then one of the biggest banks in our country comes out whining that they got to hold back, and they, in his words, not mine, will restrict us from being competitive with banks around the world. All right. So this whole system is completely collapsing right now. The transaction, which is subject to approval by regulators, well, it's going to get approved, trust me, turns the usual mergers and acquisitions playbooks on its head. Typically, it's the larger company that buys the smaller one. This is the greater fool theory in the banking industry right now. As a matter of fact, I'll be talking with hopefully a B of A insider I find out tomorrow about the mortgage industry. We're gonna let you know how that one goes. Can't wait to bring you guys that information. Bank of California has 27 full service branches, while Pacwest has double that. Bank of California is moving up. So before we get in now, we're going to get into the Kansas Heartland Tri-State Bank closing, right? I talked about this last night. I wanted to bring you the information, but I'm going to play you a video, just a clip of a video that I put out in, let's turn up the volume here. In May, okay? So yes, here we go. It's entitled, "This is Bad, Pacwest Bank." All right, here we go. And then we found out a couple days later. Now, I told you that I believe that you're going to see a bank that is going to go into a crisis either this week or next week, and it's going to be somewhere in the southeast region of the country, okay? Or Mideast area, you know, like around the Kansas City area. Or not Kansas City, but Kansas. So this doesn't fit that bill. But check this out. A majority of the ownership in this bank, So check this out. I actually talked about the size. It was like $130 million. And so go back to that video and check it out. I don't want to play it again. I didn't cut the clip back earlier enough. But what was happening was this bank in Kansas City was having problems. And it's taken this long because what the Fed has done is they're trying hard to hide all this from you. The FDIC just had that leaked video that showed them in a boardroom talking about keeping this from the public. If the public knew, they would panic that the banking system is collapsing. The Fed came out through some notes, meeting minutes that came out. Reporters are like, wait a minute, you were contacted by over 700 banks last September that said they're failing? And you did nothing to warn us? They always tell you the truth. And so what they're doing is they've encouraged more and more banks to come in and say, we will not tell anybody. As a matter of fact, we're not, that whatever banks come to us needing liquidity right now, you are in a crisis, we get it. We have opened up the repo window, the repurchase window, and bring us whatever collateral you got and we'll flood you full of liquidity in an attempt to hold this back. There's no stopping this, but it's going to hold it back. And even the Federal Reserve, Jerome Powell, came out the other day and said that we are looking to aggressively decrease our balance sheet. You want to know why? Because they know a collapse is happening and all those assets are about to be severely hammered in price in the coming months or the next year. And so they are going to aggressively sell. Well, who is going to buy them? Well, banks. Really, it's your pension fund. And when I say that your pension is probably going to either not be around or severely hampered by this coming wave as collapse in the future, right, in the next year or two, it's an understatement, all right? But everybody expects everything to happen tomorrow. So you heard me like there. I'm like, hey, I expect this to happen in the next couple of weeks. I know this bank's hurting. And I couldn't come out and tell you which bank because trust me, they'd be on me like white on rice so quick because I'd be encouraging a panic. But I said enough to where I'm like, all right, here you go. Here's the information. It's coming out of Kansas City, the size of the bank. And now here we are. We're at a collapse and a takeover of Kansas Heartland Tri-State Bank, and it's happening exactly when I said, first I thought it was a couple weeks, and later on I said I think the next one's coming in late July. Heartland Tri-State Bank of Elkhart was closed on July 29th with the Federal Deposit Insurance Corporation taking control. It says here, the ongoing crisis surrounding U.S. banking system struck again as Heartland Tri-State Bank of Elkhart was closed on the 29th. The Kansas office of the state bank commissioner with the Federal Deposit Insurance Corporation taking control. On July 31st, the 4 branches of Heartland Tri-State Bank will reopen as branches of Dream First Bank. I'm not joking. That's the funniest name ever. Dream on. Banking system's crapping. So why don't you just bank with Dream First? Why don't we be your first dream? Until, of course, we're taking over. And that is the plan. I'm not joking. Bank consolidation just gets the bankers just so excited. And just so you think, the people that run these smaller banks are collapsing, don't worry, they're fine. They're going to get their bonuses for mismanaging your funds, and they're going to get a nicer job, a cushier job. As a matter of fact, if memory serves me right, which one was it, guys? Silicon Valley Bank. Which bank was it that failed in the spring that the heads, the people running that bank, all came from Lehman Brothers? Can you guys remind me which one that was? I don't remember, like the CFOs from Lehman Brothers and a couple of the C-suite execs came from Lehman Brothers. Just put it down. Signature Bank or First Republic? It was one of those guys, right? Really cool. It's super cool. It's like, man, you screw up, you move up. It's almost like working for the government. And that is what's happening. And they love consolidation because it's so much easier to control a few big banks than hundreds and hundreds of little banks, because those guys could go rogue and stop spreading lies and rumors and death contracts like crazy. That's what they want, right? They want just a handful that's left to where they can just feed you full of garbage. All right, it's like mushroom management. Feed you full of crap and keep you in the dark. On July 31st, like I said, they're going to transition. Oh, that word's never been used more perfectly. To Dream Bank. Dream First Bank. It says Heartland Tri-State Bank is the first bank to collapse since troubled First Republic Bank was acquired by JP Morgan in May. And again, going back to my video where I thought it was going to happen a couple weeks later, it does make sense that they would do everything they could to keep this bank going. And it does make sense that they probably went to all the banks from Bank 54 to Bank 145 or whatever Dream First is. Or my point being is that they have to go through all these banks like, will you take it? Will you take it? Will you take it? We're getting a bunch of no's. Eventually, some moronic bank's going to take it. We're like, we'll take it. We're super small. We want to be bigger like the big guys. Just like Enron. But they had 3 banks or 4 banks crash in that small period of time, and they couldn't let any more go through. They got to put some time between it because they got to let the American public not only digest it, but completely forget about it. Usually, from what I've found, is most Americans forget anything after 2 weeks. At least management does, whoever you're working for. But my point being, let's be serious, is that some time needed to happen. Now, the next wave has begun, and I believe, I'm going to throw out another date, I think, I could be wrong, 3rd week of August. 3rd week of August, I believe we're going to see the next one. It could happen before that, it could happen after, but it's guaranteed it's going to happen after. But I think the next one we won't see happen. So we got Pacwest and this Tri-State going down right now. I think we'll see the next one 3rd week of August. I think there'll be enough lies to tell you and full of your brains full in the mainstream media for the next 2.5, 3 weeks until the reality hits. And then by end of September, holy moly, we're going to have some fun. All right. And the only reason I do these, and I sort of repeat myself, is because I want to, you need to understand, I do have a little bit of working knowledge. I use a lot of jokes and sarcasm to get the truth through. But when I say to get ready, one of the easiest ways is just get out of debt. It's just insane. Don't get into more debt. Save up money. Maybe buy some gold and silver. That's not financial advice. I'm just trying to do what governments and rich people are doing. That's what they're doing behind the scenes. A lot of rich people are selling off stocks. They're getting out of their speculative stocks, and they're getting into stocks that are going to do well. Don't look at transport stocks right now. I'm not invested in banks. I'm not invested in that kind of stuff. As a matter of fact, a third of my portfolio is in cash right now. I'm just sitting back and waiting, and I'm letting those prices, the stuff that I've invested in, that's definitely coming back down, and I'm going to reinvest eventually. But I think you're going to see a panic on Wall Street first. So that panic has to come so that the Fed can and will start to lower rates. The problem is with all this information coming out, as far as how strong the economy is, I think you're not going to see them panic just yet. I think that doesn't come until, end of September, early October. And I do believe you're going to see the Fed in 2024 lowering rates and lowering them pretty aggressively. But by then, the damage will be done and people will not be racing into assets that they once were the last couple of years. That bubble has been blown up and it's popping right now. Ladies and gentlemen, thank you so much for watching. I hope you have a great day. The Economic Ninja is out.